This is the simultaneous kind of a cyclical nature happening on multiple levels where you find the end of multi-hundred-year, multi-thousand-year cycles. BlackRock is a useful idiot, right? Because they've got a lot of money and they're going to buy a lot of Bitcoin. And so for 12 years, we have front-run BlackRock.
It's going to help us to be more informed so we can be better investors in the future.
This is really the first time, again, another first in history, where the average person got in there a decade before Wall Street did.
Today we have Bitcoin maximalist Max Keiser giving us his price prediction for Bitcoin and what we can expect in the next few months. Keiser was one of the first to celebrate Bitcoin's historic six-figure milestone, but he says this is only the beginning. Keiser believes BlackRock is playing a much bigger role in 2025 than any other institutional investor. And while he maintains a bullish price prediction for Bitcoin, he discusses why this is unlike anything we've seen in history. Keiser discusses the collapse of the fiat money system around the world. This is where he says Bitcoin will actually show itself to be a true form of money without influence from inflation or government's continuous printing. Let's get right into the latest interview with Max Keiser as he gives us his Bitcoin prediction. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. Click the first link in the description and enter your email to join 50,000 others in becoming a better crypto investor right now.
In the case of the United States, which has the US dollar and world reserve currency, they're going to reach this place at a different pace than other countries. Countries where you have hyperinflation like Venezuela or Argentina or Zimbabwe and these other countries, they're obviously poised to more rapidly embrace Bitcoin as a way to save their economies. So what we're seeing now is, depending on where you come from, it will depend on how quickly you adapt to Bitcoin as world reserve currency. But that is the end game. That's where we're all going. Yeah, I guess to look at this from the perspective of 300 years of an experiment with fiat money, which started with the Bank of England back in 1694, 1696 period. And then in 1971, we had another chapter in that experiment where the entire world went entirely on a fiat money standard without any currency backed by anything other than other fiat money. And so now this is ending. This 300-year period is ending. And we're heading into the Bitcoin standard era where you have Bitcoin becomes the global reserve. And so different countries are reacting to this in different ways. Well, one of the interesting attributes of Bitcoin is that for the first time in history, it separates money from the state, or it separates money from any centralized control whatsoever. So money becomes something entirely different than we've been used to in our entire history as humans on this planet. Most of the time, we have two problems with money. One is concentration of power, or concentration of wealth, because money throughout history has been pretty much what's called proof of stake. If I have a lot of money, I have influence, and I can change laws to make it easier for me to get more money. It's corruption, and it's because of the nature of the money that we've had for millennia. And the same applies to gold, by the way. But with Bitcoin, it's a system called proof of work. It's not proof of stake. And no matter how many Bitcoin anybody has or any organization has, they have no influence at all to change the protocol. So it's very egalitarian in that sense. And it also, for the first time, is a savings technology, which has a huge impact on folks. It's the first time in history that anybody on any budget can store their wealth, and it can be unconfiscatable. And the price of protecting that wealth is virtually zero. If you look at how wealth is aggregated today, usually those with a lot of wealth spend a lot of money protecting that wealth. They have security guards, they have vaults, they have a lot of lawyers, they have a lot of accountants, there's a lot of politicians, right? There's a huge cost to protecting and maintaining that wealth. Well, with Bitcoin, you don't need any of that. You just have to memorize your seed phrase. That's it. And that's available to anybody. So the person who's, let's say, an artist who sells art, they make, let's say, 20% of the nominal per capita income in a country, or 50% of it, the capita income. But they're happy to do that because they just want to be artists. They don't want to be grinding it out as a lawyer, perhaps. But they can put their savings into Bitcoin, and it's inflation proof. So their purchasing power will always go up. The purchasing power will mathematically continue to go up forever. And they can be free to express who they are. And I think that's part of this Renaissance 2.0, is that it frees up self-expression in a way that we haven't seen since the Enlightenment, since the Renaissance. And that's totally enabled because of the savings technology, this unconfiscatable separation of money and state called Bitcoin. Whether this introduces another cycle, I think that, I'm sure it does, but I think that the nature of this cycle is quite interesting in a number of different ways.
Embracing an unyielding enthusiasm for the crypto realm, that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Keiser reassures that a long-expected surge awaits as we head into a bull run in 2025.
Right. Well, clearly CBDCs, central bank digital currencies, are on the other side of the fight toward individual sovereignty and freedom. Because CBDCs are highly centralized, highly controlled. It's fiat money, everything you hate about fiat money, but much worse. And so that's clearly on the battle it will be fought against central bank digital currencies. And I think that what we can look for and what we can be helpful about is that the battle is going to be all about energy and energy use. And Bitcoin uses a lot of energy. We know this. And so do CBDCs, so does the military use a lot of energy. So does AI, artificial intelligence, use a lot of energy. And we want most of the energy, or all of the energy, we want it to be hashing Bitcoin. And the good news is, if you look at the amount of energy that Bitcoin uses, what's called the hash rate, it's absolutely skyrocketing. And it's never been in a bear market, really. It's been going up for 12, 13 years. But with the Bitcoin price, because it's this new asset class that ultimately competes with gold, that means it's going to go from just under a $1 trillion market cap to $10 trillion market cap. You're talking about an asset that could easily go to 400,000 in a relatively short period of time. So you don't want to be the guy in the cartel who's short Bitcoin when it's about to make a 10x move. So it's very difficult to maintain that cartel in a Bitcoin scenario because it's got that huge upside potential yet. And it also, because it's redefining money as we know it. So it's going to attract, by the nature of this new digital synthetic commodity, buyers are going to essentially rule price discovery. It's going to be very difficult to keep a sell order in this mix where you've got this upward trajectory of a new asset class where the total addressable market for Bitcoin is literally $400 trillion, which is the total market cap of all investable securities, stocks, bonds, property, all derivatives, all these things taken in aggregate is $400 trillion. So, and that is potentially the total market addressable market for Bitcoin. It can demonetize. I think it's already demonetizing gold, just like gold demonetized silver. It'll demonetize the property market. It'll demonetize the bond market. The bond market's a $200 trillion market. Bitcoin's not even at a 1 trillion. That's a 200x right there. So to get back to the price suppression, of course, there will be a lot of price discovery games being played with a lot of derivatives. But ultimately, unlike gold, it'll have this natural upward bias. The second thing is that gold is very difficult, and nobody really wants to stand for delivery of gold. Yes. So when you're in the gold business, it's all paper settled and it's all cash settled, and people rarely would say, I've got a ton of gold in the market I'm bidding for, I'm going to take delivery of it. I'm not going to, the gold, you've got to ship it, you've got to insure it, you've got to store it, right? Moving gold around is very difficult, shipping it and storing it. With Bitcoin, because you don't have any of that cost whatsoever, and you control the private key, any laddered, manipulative price discovery edifice can be quickly destroyed by pulling your private key, because it's the base level of any manipulative scheme, any Ponzi scheme would have. If you can pull it, the whole thing collapses.
Keiser challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Keiser also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Max Keiser? And what are your thoughts on his prediction for Bitcoin in 2024?